What is up, everybody? It's your boy, The Wolf. Welcome to the Wolf Den, June 17th, Trader Takeaways Monday morning. A little bit of a slower pre-market, but bam, we hit some action. Scanners were lighting up. CTRV was a player today, ARQL, and also a loss on EIGI. But let's just go ahead and hop right into this. So up here we have ARQL, probably my best trade of the day. Really just wanted to hop over to the big screen real quick to show you some short-term action right here. We're looking at the 2-day chart, 2-day 1 minute. So we're looking at a wave 5 push on the short time frame. So you got wave 1, 2, 3, 4, and now we're making that after hours, possibly tomorrow pre-market wave 5 push. Noticing that a lot of things are running after hours. Let's take a look actually at MGI. That's pumping right now. I think it's MoneyGram. So look at this thing. This thing is also on wave 1, 2, 3, 4, 5, 6, 7, 8, 9. This thing on the 1 minute is just strong. Things are just running after hours. Sentiment shifting. They also have, let's look real quick since I'm on it, at the 3-year. Now this is just speculation, but the reason I believe that they're running after hours is look at all of this resistance. Volume deposits right here between $2 and $2.60. So if they're going to try to push through that, they're going to see some resistance. But after hours makes it a lot easier. People aren't watching it. People don't have the right routes or the exchanges to jump on it after hours. People are just with their families, or they're just not studying like they should be, like we're doing here at Wolf Trading, right? All right, so let's go ahead and jump back into ARQL and let's pull up executions. Hope everyone had a good day today, stayed safe. So here's ARQL executions. Here is that base right here, right? That base at VWAP, like 930. Again, yesterday we saw the same thing right here. Right here, same thing. Basing, push, possibly manipulation. I wanted to show you too that remember let's hop back over to the big screen last time, guys. Here's the higher time frame. We observed this on Friday. Let's go ahead and go back to the 2-day chart. Now, remember last Friday we were talking about possible dark pool prints in manipulation relation to the pattern that they're printing. So I think the manipulation on this is rather significant. Look at this wedge right here. Just something to note of. That will definitely be extended, and I'll be looking at this line as a ray for tomorrow. All right, so back to executions right here on ARQL. Now, this company is over $1 billion market cap. You can see down here. It's biotech, 109 million outstanding shares, currently at the close, trading over 1 billion. Executions, I wanted confirmation on this thing. I was also trading a cowboy of a low float, CTRV, but we'll jump into that after this trade. So I had it on watch, and some guys in the room were buzzing on it. We're talking about it. And I said, there's a possibility that we have a 970 right shoulder. So you can see a possible left shoulder, head, right shoulder, neckline right here. It's a pattern that I am very familiar with. So I gave it a shot. I put some passive liquidity out there. Price spiked up and grabbed me, and boom, instant flush. So I trimmed about a quarter of the position, and I'm in the money. Now, this is a fantastic trade because motions, I have a little bit of money in the wallet. I'm padded a tiny bit. I'm feeling good. My levels so far are correct. I avoided this push, and now I have a good average relative to other traders. A lot of traders potentially are stuck and they're averaging up. It's a possibility, but I'm feeling good right now, so I'm going to trade this. So I devote all of my attention to ARQL, and I start to channel trade this. So I took this trim off of the first flush. Now I'm watching the order flow. Now I'm on it. I know I'm in the trade, and I have a strong indication that this is going to be a fantastic trade. I'm excited. I'm glued to the tape on level 2. I'm looking at lines, levels, all kinds of stuff. My brain's smoking. So we push up here. I add about 960. Threw a couple ads out. A starter add, right? So starter add, just waiting for more confirmation. Now, if I'm going to play a head and shoulders pattern, I want to see the neckline. If you're not familiar with the head and shoulders, look it up. It's a great reversal pattern. Just check it out. So I had a neckline here between 940, 950, give or take. People draw their lines differently, angled, flat. Everyone has their own strategy, but this is the band, right? The neckline band. So I trimmed here before VWAP. This second trim would normally be at VWAP, but I had the hopes that we're going to go and retest that neckline because that's what I'm trained to do. I've traded this pattern multiple times, especially last year. This was my number one pattern that I traded. So boom, we come up to 940, 950 neckline retest. I add, I'm right on the money. We come down, I'm waiting. I could have added here again, but just still watching the order flow. I don't want to go too crazy. And I take profit. Beautiful cover right here at 922. Executions are right here. I believe it was 922. Just using the VWAP support, right? Support, resistance. We're just channel trading this. Now I'm getting a little bit confident here. So you can see feeler add, feeler add, feeler add. Now I get a little bit cocky and I go feeler add, and I'm early. I'm excited. I think that we're gonna be in this type of a continuation downtrend. So I'm putting my ads out and my feelers out underneath the majority of the previous consolidation, which is right here. I'm guessing that this is going to be resistance, which is a very, very downtrendy resistance for us to wick here, or even here I was below it. So I was a little bit aggressive on this, but I have padding. I got some money in the wallet and I'm feeling good. So I take an ad right here. I raise the average. Now I'm at the heaviest I've been. I'm still carrying some shares, right? Half off, maybe quarter, half, maybe 3/4. I'm not exactly sure, but I'm still carrying shares from here. So my average relative to other traders that are trading core positions or that are trading channels or that are trading support and resistance, that are active traders, I have a good average comparatively to active traders in my opinion. So I notice here that we're not getting the strength anymore at 944. Let me see if I can zoom in because this is pretty important. This trim right here kept me in the game as heavy as I stayed in. So we're seeing right here after this ad, I was early and we came down and we're basing on top of 945. I did not like that. Do not like that. This wick right here kept me in. I was thinking about cutting. 75% stop market trigger was set at 955, right? 75% stop market, 25% right here. I'm layering my stops, and sometimes we'll get to that later, but I'm trying some advanced strategies right now with layered stops, and it seems to be giving me more options with the same amount of risk. I feel as though if I have more options available to me with the same amount of risk, that gives me an advantage to other traders who do not have multiple options with one risk. Now I'm just working this strategy. I'm still new at this strategy, but options are good, right? Okay, so right here, 942, I trim. This was my favorite trim of the day. Gave me the opportunity to stay in a little bit longer than I probably should have, but that 955, 954 stop right here, I think I cut it manually. Looking to get right back in on this spike. I thought we had for sure exhaustion right here. We did. I was a little bit early. I think I hit it on the way down. And then immediately I'm looking at these lower highs. And I'm thinking this could be some strength, which it was. And I'm trying to get off of so many executions on the strength waves, right? So we have a strength wave, then we have a weakness wave, wave 2, right? Weakness, I want to trade here. Lay off this wave, strength, trade more here. Okay, that's what I'm working on. Very simple stuff. I know some of you guys are far superior advancement to this, but I'm just explaining this. So I take a little bit of trim right here. Then my next target is set down probably around 928, 931. I had targets set below. I think 891 was my ultimate target. If this thing snapped, I was thinking it was going to snap hard because look at all these longs. All these longs are in on this right here, and if these stop orders get triggered, we're going to see a snap, especially if the manipulators also hit the bid on top of the snap. You know, we could come down to 875. That was not the case, but I was prepared for that. Remember, targets in front of the tape. Okay, so right here, this was also a really good cut. I cut based off of just increased buying power coming in and these higher lows. Higher low, higher low, higher low, higher low, higher low on a micro time frame. Boom, we show strength, and I'm in again on the front side of this push. Now, this is where I start to say, you know what, this isn't working. I'm front side, front side. I'm front side. I think I caught this one on the way down on a lower high, which is good. Front side, and I'm like, all right, I'm just gonna hang back a little bit. I'm not gonna throw an ad up here. I'm just gonna wait, and I'm gonna use aggressive liquidity, and I'm gonna hit the bid on the way down. And that's what I did. This was kind of a game-changing moment for me right here. I switched up the style a little bit, and it worked out pretty well because I don't know what it was. I just felt like I was the guy. More when I use aggressive liquidity, I feel like I'm more involved in the action, if that makes sense. But I waited a little bit longer to take these targets out, and I got a little bit taking profit here. Now this conservative TP forced me to hold off on VWAP, and I had like a 920 target off of this. This was too early. So what do? I adjust the next TP. Okay, now this one, this strength right here, again, I wait. Now the reason why I waited a little bit was look at the amount of consolidation time. So this thing consolidated from 1315 all the way to 1350. So this is like 45 minutes, give or take, of just range bound, right? We're consolidating. Remember, stocks are only either in a consolidation period or an expansion period. Now you can expand to the upside or to the downside, but those are the two periods. And in theory, the larger that the stock is in the consolidation period, the more rocket fuel it's going to have, right? The more, just think, as this thing goes on in this range, right? This is only a 20-cent range. It's like pulling a rubber band back, and this thing's just going to shoot relative to this consolidation to range. Now that's not always the case, but this is the longest consolidation that I've seen, the most congested consolidation that I've seen on this all day. So that gave me the confidence to put targets up higher. I avoided the ad using this resistance. I didn't catch anything under 950. Right now, this right here, I remember I had all this time to think about this and still had my targets out. So I'm just sitting on hands. And what do? I take out the calculator and I go to work. I'm thinking, how do I want to approach this ad? Now, I don't want to stay on the front side because I've been doing that. This is a really good trade. I have padding. Emotions are pretty much not too bad because I'm ahead. I can cut and still be in the green. Always have a hard stop out. I don't remember where it was exactly here. Probably high a day. I don't remember, but I'm focusing on this ad, right? Around this consolidation, I'm focusing on this plan. So the plan was to add at 936, at 938, and 944. Okay, now 944, yeah, 964. Is that correct? Let me just double check, guys. I want to get this right for you. Price 964, size. Okay, 964. So 936. I'm sorry, I had this all written down. Okay, well, we'll get to this again, but I don't want to make it too long on this. But I calculated these ads. This ad was double the size of the feeler, and this one was a little bit heavier. So this is a scaling in process, adding more liquidity up to the top gives me the best average, and it puts more size against my risk. Now this size right here was front. I wasn't going to add any more on the front of this. So actually this was not calculated because I hit the bid on the way down right here. But I had a pretty solid average, and this wick right here did concern me enough to trim early, and then I just kind of sat back, took profit, and I'm feeling pretty good. I brought this ad up. I still had a target in the 20s off of this. I pulled that up to 36. I thought with this consolidation, this higher low based off of this consolidation, I thought that we were going to base again. And remember, the higher time frame of this chart is strong. This thing is running hard. It's just strong, and we're shorting it, and we're doing pretty good, I think, personally. So then we come back up. Now I'm just trading this based off of this flag right here. So you can see this flag. I have orders here. Not here. I have orders here based on this. I have orders here, right? So we're starting to have a little bit of a flag, and we do break out. But I don't normally draw patterns on the chart, but I'm normally more focused on the trend, the higher highs and the lower highs, and etc. But that was something where I found that there was a lot of liquidity as resistance there. So I threw a 964 order out after the feeler, top ticked it, trimmed, and then I took a 935 target. Now, I should have took it all off, but I'm just in a good mood. I thought this was a great trade. As soon as we pushed right here, I should have just cut it. Now, this is where I had a little bit of emotions because I'm thinking, man, this is a great trade. I just should have ended it correctly. I wanted that cherry on the top, right? But I kept 400 shares, and at this point, I should have cut this. This is a strength candle. All the shorts are covering, and this thing is going higher, but I didn't. I waited until I had to stop right here. I wasn't going to go past 65 or 66. We topped out right there, and then I just exited at the first seller exhaustion, which is a different type of exit strategy that I'm working on. Hopefully, when I'm in that type of an exit strategy, I want to see massive exhaustion. But that's what they gave me. I'm watching the tape. That's where I exited. I'm all out on the trade. I'm glad I was. I didn't even think about holding on to shares on this one. This was a great trade. I'm happy about it. Let's move on to CTRV. This one will be quicker. CTRV was the wild, wild west. Okay, we had a reverse split. Let's pull up the Jumbotron. CTRV. CTRV had a reverse split on 531. They had a 70 to 1. I don't know if I have the correct settings on this chart. I do not. But 531, right? 531. My data is lagging. But 531, they had a 1 to 70 reverse split, making this outstanding shares at 590,000. Nice downtrend. This is a dilution chart, rinse and repeat, garbage company in my opinion. And this thing excites me. We got to move from $180 down to $5. I mean, we already know what time it is, right? We're going to take advantage of that. Except the range and the spread on this thing was ridiculous. So now I didn't enter on the front side. Again, waiting for confirmation. Hit this one early. This one was ridiculous. It was moving fast. Now, what a difference between a 590,000 share company to a 1 billion market cap company. I forget ARQL is outstanding shares like 190 million. So just totally different. But we trained for this. We watched the tape. So on this one, I get in on the way down. I believe I put a limit order out and I let price come back to grab me, putting a feeler on. Now this was a dangerous play. I did have a stop limit actually within range and it could have triggered, but luckily the bid was so low I didn't get triggered on it when it wicked. I think I had a 1726 or 1727 and it was right there and it didn't trigger thankfully, but I could have stopped out. Now looking at this play, these bars are 50 cents. So I have $1.20 stop. Now I need to get a $2.40 cover to get a 2 to 1. Now if my average right here is $16, I need $13.50 or $14.50 for a 2 to 1. But I got a little nervous because of this strength and I trimmed early. I wasn't full all out. I decided to not trim here. This was massive weakness. It was printing red, and it was just smoking. The tape was smoking. This thing was moving. So I added into strength going into the bell. Very dangerous, especially with this Black Stallion float. And knowing that once we started seeing straight red weakness into the bell, I got real excited and I just started covering. I had maybe 1 or 2 targets out here and it was a great feeling. The P&L was nice. I wasn't staring at the P&L, but I knew about where my average was and I know where my targets are. This is an example of a trader error. Not all of these targets were out. Remember, if you've watched our trader recaps, we like to keep our targets in front of the tape. We want to stay ahead of the tape. And I think 2 of 4, 50% of my targets were passive and 50% were aggressive liquidity. Also, a side note, 58.75% of my liquidity today was passive. It's an improvement from yesterday's 51%. I'm trying to get that into the 70s and 80s and ultimately 120%, right? Okay, so now this is where things get a little bit hectic. I made some mistakes here. Now this thing around support and resistance, the spread is 20 cents to 40 cents plus. That's super hard to get in and out. It's longs who don't have shorts are buying this thing up, right here. you know, looking for that bounce or whatever that they like. Right here at $14, possibly we saw some action at, I'm sure there was a lot of orders at $13.50 around this time, but they're not even giving it a chance. The range on this is exceptional. So this ad right here really hindered me from taking this home. This could have been a home run trade, but I added early here, and that forced me to put my max ads here as opposed to putting these ads here and these ads up top. That's a mistake. That's a trader error, and that took all this downside potential towards the end of the day away. I ultimately, in the room, I said I wanted targets at $10.65 or something like that. But I only had enough liquidity to get out at $13.50 because I got top ticked, stopped out. Now, like I said, I never once had a position on this ticker without a stop market set. I was fortunate enough not to get triggered here, but I did get triggered here. I got top tick, stop market order triggered out, and that screwed me up a lot because when we slammed down, we bounced. Luckily, this target was on point because I filled a long order here. Now, this was my next target off of this size. I was looking here. I'm looking at new targets here, wherever I find fit for targets. But this, I have no position. I stopped out. Instead of clearing my orders, I didn't have enough time. The first target hit. Now I'm in a long position, and I sell. Now I'm upset. Very, very upset. I'm not trading correctly because the float, this thing is too fast for me. I'm not trading this like how I can trade a larger float, but this is practice, and the spread is just 20 to 40 cents. So then here I'm coming up, I'm adding into strength again, the same thesis right here. I'm putting my ads on at $15. The ads need to be the feeler ad here, and then look where this chart is wicking. We're getting wick at $16. The large shorts, the large players are going to put their liquidity up here, I believe. I believe if we did push up into here, we would have seen some large selling action, possibly. That's just my thesis. But again, I'm early. Luckily, we didn't see the strength that could have took me out of the game again right here with probably a 1650 stop now against this wick. And then I just start taking profit. Again, using the same target. I like this wick here. I took that. I got a partial fill here. And I was just watching the order flow, answering questions in the room. And I had a partial fill. I should have noticed that, and I could have pulled it, and I could have readjusted my target. But I did not, and I lost a good amount of downside. You guys who saw this today, I think low a day, we made it all the way down. It was an all-day fade down to 960. So I wanted like 1050 targets. I probably would have caught right here, or maybe right here. I'm not sure, but this could have been a home run. Shoulda, woulda, coulda. Next time the float is 500K, I'm gonna drink a V8 or something. That thing was smoking. The tape was just like, man, good stuff though. This is how we learn. This is how we get better. I felt confident in what I did. And I had protection. I had a market stop trigger at all times. So I know, except for the slippage, I know the potential loss. Okay, so we have one more trade, guys. Thanks for bearing with me. The last trade is EIGI. Let's just go ahead. This was a loser. So I haven't had a loser, I don't think, on the takeaways for a little bit. I don't think ever. I'm not sure. Don't quote me on that. But this trade was just early. Now, all day long, I'm doing well. I'm not entering front side. And then this thing just gets explosive range. The average true range on it, I could pull it up, but I'm not. So my average right here was 537, I believe. And this right here was my first mistake, besides getting in too early. But I had an order out to trim at 533. I missed it. The bid or the offer didn't come down. The offer came down to 534, and I'm waiting, and it popped up. Now, if I missed it one time, shame on me for missing it again, right? I missed it again, and it was kind of floating right there, but I should have just hit the offer, especially when I'm on the front. I need to have the patience. I need to have the discipline to trim when I'm messing around with the front, and I did not, and then that ultimately gave me an emotional stop. I adjusted the stop. The stop was high a day, and I'm just thinking, give me a little bit here. Maybe we'll fade. Maybe we'll wick. Watching this wick, and we did it. But I did stop out at 562, and then the brokers switched this over, and I didn't have any access to shorting from this point forward. Okay, so everyone, that's the trader takeaways. Let's go ahead and hop over to the room. Boom. Let's see what we did. Let's go to the fundamental room today. Today we were calculating DARE had a recent S3 and their IB6 MVPHS allotted dilution restriction per trailing 12 months is right here, so we know how much that they have available to dilute, as well as the most current float, which is 13.9 million. That's the current float. So the S3, if the company has a market cap under $75 million, you can pull the float off of an S3. That's just a little heads up. And then the runners today, last thing, thank you guys for sticking with me. Obviously ARQL, day 2. CODA is a day 3. EIGI was a trade that we had a loser on, still up on the other screen. VISL, CTRV, we had some nice pre-market strength. Didn't get a hold of that one. VSTM, closed strong. And MGI. MGI, I showed you in the beginning, has that after-hour push. And I'm not too sure. I'm going to do some fundamental research on that one tonight. And just want to say thank you guys for watching the video. If anyone's interested in hopping in the Wolf Trading Discord room, it's open enrollment. There would never be a subscription fee or a monthly membership fee. We're just searching for talented, like-minded traders who have passion for trading and want to get 1% better every day. All right, guys, thank you so much, and it's been a pleasure. See you tomorrow.